Despite the recent softness in the iron ore price, Rio Tinto's Sam Walsh says it should hold above $100 a tonne, which would be good news for a lot of miners and investors. I'm joined by Matt Chambers from The Australian. Matt, Sam is bullish, but he would be, wouldn't he?
Yeah, well, he's got to talk his book to some extent, I guess. But one thing about the iron ore miners is they earn so much money from iron ore that they also spend a lot on research. So you've got a lot of bearish forecasts out there, and they may be a bit more objective, but on the miners side, you can say they are researching this quite well. So I guess you've got to weigh up whether you believe how much they're talking their own book and how much is educated forecasting.
But he was responding to a Goldman Sachs report that suggested the iron ore price could fall back to around $80 a tonne. What would that do to the miners?
Yeah, well, that would, as Sam Walsh said, if you're not BHP or Rio, it's going to cause you some strife. BHP and Rio, cash costs for Rio, they say around $20 a tonne. Now, obviously, that wouldn't get them a return on the billions of dollars they've been spending expanding, but it would keep them afloat, whereas some of the other miners are doing it a bit tougher with costs, or a lot tougher. And also, Atlas Iron was out there a couple of days ago saying that not only is the price coming down, but the discount for lower quality ore is also widening, so that also makes it a bit tougher.
Right, so why is the iron ore price dropping?
Well, I hate to use the term a perfect storm, but basically the main reason at the moment is there's a whole lot of supply coming on. BHP, Rio and Fortescue have just been doing a great job of expanding their mines and pushing out volumes, and that's coming onto a spot market which isn't huge, which sets the price, so that has a big impact. At the same time, in China, you're seeing a push for an anti-pollution push, especially around Beijing, which is closing down a bit of steel capacity. That's the sort of thing that the miners are hoping will, or saying will work itself out over a couple of years, but for the moment it means that there's capacity being closed down and a bit of a lull in demand. Just the general changing of China's demand from an industrial construction-driven boom to one which is going to be consumer-led and where there's not going to be the same demand for building steel products.
So in terms of the share price for some of the iron ore producers in Australia, how have they been tracking along with the iron ore price?
Yeah, well, tracking pretty much directly. So in the last year or so, you'd have to say prices were surprisingly strong. So pure stocks like Fortescue and Atlas and, pure iron ore plays like Fortescue and Atlas and Rio, which is heavily exposed, have been holding up on that basis. And now it's coming off, and people aren't quite sure where it's going to end. And all these bearish forecasts like Goldman, there seems to be more evidence they might be coming true. People are bailing out of the iron ore stocks.
Matt Chambers, thanks very much.
Thanks very much.